Hi all, welcome to TCOM Education. My name is Michael. I'm the analyst and the content creator here on the platform. So TCM stands for the Charts Maverick. This is what we're dealing with on this channel, charts. That's why you don't see faces and other weird stuff. We're concentrating on charts, talking obviously, as you by now understand, only about the US equity markets, no crypto, no forex. So anybody that's asking me or requesting analysis of any other market, gold, whatever, no, we are not dealing with that. So we are solely dedicated to the US equity markets that keeps delivering news day in and day out. It's like there is no stop here. It's around the clock. So let's recap the week of the last week. Let's call it the last week of August. Normally the last 2 weeks of August are kind of relaxing weeks. People are coming back home from vacation. Not much is happening across the globe. I don't know what's happening across the globe. There is no stoppage of great moves in the US equity markets. Earnings, although we are obviously behind the earnings season, but we had the earnings this week, Nvidia and some others that moved the market. Actually, not Nvidia moved the market. Nvidia was moved by other stocks. We'll discuss them in a bit. So I'm gonna take my time with this recap. It will take more than 30 minutes. Some people are asking me why I'm doing it so fast and not giving enough time to individual stocks. And again, I don't want a video to end up being anywhere between 30 minutes and an hour. This is not the medium for such a recap. However, being that this is a weekly recap, it will take however time it will take, and those who want a quick fix, it's not going to happen. So let's start. Monday, August the 25th, one stock stood out as the most important stock that reported earnings, and this is PDD. That's Pinduoduo, the Chinese name, and this is the parent company of Temu. I mean, is there anybody that across the world that didn't hear about this company, which is delivering any product that you want at sometimes at ridiculous prices from China or from wherever warehouse they have across the globe to your door in the US? I'm in Israel, so in Israel basically they're dominating this cheap stuff marketplace. They're gonna be under some pressure with the Trump administration basically closing down the door on them for shipments up to $800 that were exempt from tax. It's gone. So if any shipment into the US will carry some fees or tariffs or taxes or whatever you want to call them. Will it hurt Temu's business? Well, according to this chart, no. So either investors believe that the Trump administration is gonna cave on this demand as well. Maybe they will cave, maybe they won't cave. The idea here is that the stock actually moved up 30% since the last earnings 3 months ago. So if we look at the earnings 3 months ago, then the stock kept down, traded higher during the trading day, and then sold off, but basically gained lots of momentum and closed the last quarter up 30%. Again, this is what the chart is saying. So we don't see any panic in this stock. Quite the opposite from this let's call tariff, which may hurt some US customers, may make them think twice. I couldn't understand how big is going to be the tariff because it varies according to price, according to, well, that's not none of our business. So again, we go back to the chart. Trading the earnings day was horrendous. So that was trading the earnings day. I try to look at the chart and try to analyze what happened. It was a total mess with a gap up, pre-market, crazy pre-market action. I'm not going to show it here because it will make us sit with PDD 10 minutes, which means this whole this whole recap is going to be like 100 minutes. So I don't want to do it. Bottom line, PDD is a good intraday trading stock. It's very volatile compared to most of the, let's call it S&P 20, the big names that we are watching, or the S&P 30 that we are watching on a daily basis. So it's way more volatile, and it used to be up until this earnings day a great trade on the earnings day, as much as I remember. Having said that, it's not like there are guarantees here. So let's take a look now, because people are asking to go a little bit into deeper into the shareholders, the profile of the company. I mean, we don't need here to dive into the profile. The profile is well known. So what are the shareholders of TMOO? And why is it that out of 1.4 billion shares, only half of them are being traded? So the answer is here. This is probably the guy that's behind the company, him and Tencent Holdings. Both of them, Zheng Huang, I guess that's the guy behind the company, or the previous owner of the company, and he still has a majority. Obviously, you can see that he owns 31% of shares. Tencent owns the other 14%. So both of them are nearly 50% of shares holding put. And I'm guessing because the math fits that those shares are not being traded, that both Zheng Huang and Tencent are holding. So we have plenty of US big firms, the big investment firms in the US: BlackRock, Vanguard, FMR, and State Street. I don't know if I'm missing anybody here. So we have FMR, Vanguard, BlackRock, State Street. So the big four are here, and many others. Obviously, the list goes on and on and on. Plenty of US investors, the top of the line, with BlackRock, Vanguard, and FMR in the game. I mean, they're not holding considerable positions, but again, that's not their game anyway, to hold considerable positions. So again, in terms of investors, I don't see obviously anything wrong here. So there will be a stampede out of this stock if things will go wrong with the tariffs being imposed. I don't know, but I think those who are investing long term and those who are day trading and watching it should brace, because how the market is going to react is going to be a process into the coming months, and definitely a very interesting stock, trading a very interesting environment, unless the Trump administration is going to cave here and bring back the no tax up to whatever, 500, 400. It was 800 until yesterday. So let's move on. So the second stock that I want to discuss this week. Okay guys, so the second stock is really by far the biggest winner of the week. Earnings in MongoDB, MDB, that's a symbol of this stock that probably 99% of traders, investors, obviously in the retail marketplace, don't know. We are not aware of this stock even being being alive. Take a look at this amazing move on on earnings. So this is an imaginary bull flag. So the stock gapped up 50% this week. Now, how often does it happen? I'm guessing not very often. So what does it say about MDB? First of all, a surprise on earnings. The earnings basically came better than expected. The loss smaller than expected. The stock has been on a downtrend for months. Take a look at the daily chart. Hold on a second. This is the 1 year chart. Basically 1 year ago in sorry, not 1 year ago, in December, by the end of 2024, the stock clicked 370. 5 months later, it clicked 140. So it lost 70% of its value in 4 months. So now it's reversing course. Obviously, the managers they are doing something. I'm sure that there is a huge surprise for short sellers. Again, I didn't check how many short sellers are on board with this stock on Yahoo Finance. On the moomoo platform, we don't have, or at least I don't know how to get this information. Basically, the chart is telling the story. So maybe there are short sellers, maybe there are not short sellers, maybe it's enough. Bottom line is that if the expectations are that software companies are going to be hurt by AI, this stock proved investors wrong. And I have two additional examples of other software stocks that basically blew away estimates and killed anybody that was short. I mean, really, I mean, the numbers are staggering. So it's not like a 5% gap up and go, not a 10% gap up and go. This is a 30% gap up and go. This is going to be beyond any expectations. And I think it has to do with short coverings. Maybe I'm wrong. So basically, again, when a stock is up 50%, something major happened. Now Jim Cramer says MongoDB is not an AI stock. Maybe it is, maybe it isn't. Others say it is an AI stock. AI may eat software, but another headline from CNBC: AI may eat software, but several tech names just wrapped a huge week. Who knows? I mean, the stock was just down 60% this year alone, and now it's coming back in this week 50%. So anybody that's investing, trading, whatever, it's not really a day trading stock, but investing or maybe short-term investing, this stock, in this case, you didn't want to be on the wrong side of this trade. So again, let's see the shareholders of MDB, and again, don't be surprised. There are no surprises here. Vanguard, BlackRock, Fidelity, UBS, State Street, Morgan Stanley, FMR is number 10 or 11. So the list goes on and on and on. I mean, it's like all mutual funds are invested here, and investment houses are invested in this stock. Obviously, the biggest shareholders are BlackRock and Vanguard. So in this case, I think Vanguard mismanaged their position here. They sold 1 million shares just 2 months ago. Maybe they added by the time the stock went up 50%. This is I mean, a huge miss on their side to sell out of 6 million, 1 million, and miss on this 50% move. But again, they are making up for it, so we don't have to worry about BlackRock that much. Anyway, it's clear that this stock was on the wrong side of investors until a month ago, and this move proved anybody that knows anything in this in the marketplace that they don't really know that much. So the chart, amazing. Now let's move to the intraday chart, and you'll see something that we hardly ever see, a gap that goes like forever. You know what, let me move to the 10-minute chart because I want to survive this test in time. So what happened here? You can see the huge gap up from 210 to 280. That's 30%. I mean, this is already scary. Okay, and then a gap up and go. So not even a pullback, nothing. It tells me that this is probably the work of short sellers that are really panicked. And you can see the second day. This is exactly, if you remember, guys. If you don't remember, just watch the chart. Watch this move over 2 days is exactly like the Oracle phenomenon. And again, in the case of Oracle, the stock moved up 40%. And again, Oracle is not MDB. You cannot compare the sizes of the companies. MDB is probably, let's see, it's not even, I think, 1/10 of the size of Oracle. It's 1/20 the size of Oracle. So it's a mini Oracle, but the price action, at least in the first 2 days, resembles. One resembles the other. Basically, we can see here a bull flag formation, then another bull flag formation. And again, for day trading purposes, I'm not going to dive into it because we don't have the time. And it's also a very spready stock. Having said that, if you trade a position of $10,000, $20,000, whatever, in terms of dollars, and $10,000 is 30 shares here, or 25 shares, whatever, you can make intraday from 280 to 320. That's $40. That's 10%. So if you have a $10,000 position on 30 shares, you have a grand. And if you have bigger positions, and again, you can definitely buy more if you are a US investor or day trader. The minimum that you can buy here is 20,000 out of your minimum buying power of 100,000. So you take 1/5 of your buying power, risk 2 to 3%, and again, there is risk here, but the risk is measured. Okay, that's earnings day on a stock that's up 40% or 30%. You cannot trade it with 1% stop loss or $1. In this case, only the spread was like 50 cents. So you take some risk, you get you reap the rewards here. I mean, the stock here is probably the best play this week by far. Okay, and also the biggest surprise this week by far. So okay, so that's MDB. How many people are watching MDB? Not that many. Let's move to the second stock from the software sector that I want to talk about. Okay, so what about Snowflake? Does it remind you guys that this huge gap up and go again, only for a day. In this case, the stock didn't deliver on the third day, on the second day, but the stock gapped up from 200 to 250. So that's 25% in one day. Then it pulled back, and then it gapped down yesterday. That was Friday's price action. But overall, when a stock is on a gap up and go and delivers 25% clearly in one day, so it did obviously surprise everybody on earnings. It did surprise if there were any short sellers in the stock. They got hammered. Let's see if I'm trying to read the headlines. Jim Cramer correctly predicted Snowflake would have a blowout quarter. So good for Jim. Finally, he's right with something. I mean, he was plenty wrong in some of the stocks that I was watching. But again, he's talking about so many stocks. Who can maybe he's right 85% of the time. I just saw some major stocks where he was wrong. Anyway, good for him. Another software company that's basically blowing out results. The profile of this company, which is an Israeli-based company, cloud data platform technology regarding data cloud. Again, anything that had to do with data cloud this week blew out earnings. You're going to see some other stocks in a bit. Shareholders, again, nothing like Vanguard, BlackRock, JP Morgan, FMR, State Street, Morgan Stanley, UBS, Teachers, T. Rowe Price. Again, the usual culprits that are reaping profits. In this case, let's see, BlackRock actually added 1 million shares here. So they took 1 million shares out of Mondo, lost on the 50% move, added 1 million shares here, gained on 25% move. And so again, like I said, let's not worry about those guys. If we're looking at the intraday chart, and here let's move to the 3-minute chart and try to analyze what happened here. And again, if you are working that gap up and go, where would be a good entry? To me, it's always the round numbers, like 224, 225, 220. And again, the risk is if you're trading this stock, at least 1%, if not 2%. But this move started at basically, we can see here at 222, ended up at 240. So that's a 10% intraday move in the first minutes. Doesn't happen very often. And when it happens and you are on board with this trade, that's basically your trading week basically done here in those, let's call it an hour. It's not 10 minutes, it's more like an hour. Yeah, an hour of craziness. And how to manage this type of a trade, I'm not going to discuss because I don't know how to manage it myself. It's just weird, doesn't happen very often. You need to, of course, have composure and watch the levels, and if you're lucky, you can stay in this trade from 220 maybe until 240 and then sell at 235. That's probably an area where you can lower your stop loss and then bail out with a huge winner, and then it continues higher, so you can add on this position. And now adding it makes more sense because you have some support here at the VWAP, a potential entry point with a measured risk of less than 1% or 1%. And again, who cares if the 1% is $3 or 30 cents? 1% is 1%. So those who are fearing an expensive big tech stocks, don't trade 30 shares of a stock in a $10,000 position are equal to 3,000 shares in the same positions. So let's say you do pay commissions, it's even better. But you don't pay commissions, it doesn't matter at all. So you trade 30 shares or 3,000 shares, the position is still worth $10,000 or $20,000, and if you lose 1%, it doesn't matter if you lose it on 10 shares or on 1,000 shares. Maybe there is some slippage on 1,000 shares. Again, that's meaningless if you are in this double-digit intraday move. Okay, so that's regarding Snow. Let's move to another software, the last one that I'm going to discuss. Okay, so again, another gap up and go that killed anybody that was short trading this stock. And of course, the stock is AI related type of a move. You can see the huge pickup in volume. There were headlines that this stock is partnering with Amazon in storage, some type of storage or other solutions for Amazon. And again, if we go and see the profile of this company, that again, this is another company that goes definitely under the radar. Who's watching Pure Storage engages in the business of delivering innovative and disruptive data storage products. Okay, we don't know what it means. Investors know. Shareholders, again, we're wasting our time. There's not going to be surprises. FMR is leading the pack. And then it's BlackRock, the Vanguard, T. Rowe Price, State Street, basically, and probably one of the founders of the company, this John Colgrove, that actually sold 400,000 shares. Okay, too bad for John, but let's not worry, like I said, about those guys. Basically, the list is, I cannot say that the list is dominated by addings. Again, we're not going to do the math. Who added, I mean, sometimes you can clearly see the list is red or the list is green. Here the list, and those are numbers updated to 2 months ago. So you don't know what happened in the last 2 months, or we don't know. Okay, so basically let's take a look now at the chart, and basically a huge gap up. Let's move to the 3-minute chart. And it was one of the easiest charts, basically. Why? Because the liquidity is great, and then the stock created this beautiful bull flag formation. You can see the bull flag here. Now, if you trade according to technical patterns, and you should, at times, not 100% of the time, but at times, you had an entry point, or at least you had a stop loss. So if you don't have an entry point, and you have a stop loss, use the stop loss. You don't have to buy necessarily at the highs of the bull flag. You can use the lows of the bull flag and enter at the VWAP. So again, I'm not going to teach day trading right now, but those are the options, okay? Now, if you missed on the entry at 70, at 71, at 72, at 73, it looks very late here. It's not late, but because the stock delivers another beautiful leg up. So is it too late? Obviously at 10 a.m. it's not too late, and it closes up at the trading day at 80. So another stock that delivered double-digit plus started at 60, closed at 80. That's $20. That's 25%. Wow, this is 25%. It must be. I mean, I don't want to say 100%, but to me it cannot be anything other than great numbers and a short squeeze. And it's the same phenomenon that we had in MDB, in Snowflake, and PSTG is doing basically the same, surprising everybody. Regarding short sellers, that's their problem. So that's PSTG. Now let's move to 2 winning stocks out of China, and then at the end we'll have 4 more stocks to discuss. 2 winning stocks out of China, and then the losers of the week. Okay, I don't need to talk about Alibaba that much, the biggest online retailer out of China, but it's now making its money out of the cloud business. So again, cloud. Anybody that had to do with the cloud business this week blew out expectations, and the numbers in Alibaba were in the cloud business, I guess, were staggering. The technical pattern in Alibaba, other than the huge gap up, and again, a gap up and go situation, not as aggressive as MDB or PSTG, but you can see that any pullback, and this is very easy to observe if you wanted to observe. Okay, so any pullback to the VWAP was a buying point. So were there other entry points along the way? Yes, there were, but any pullback to the VWAP in this case worked. So those who are not using the VWAP, please consider it very, very strongly. Those who are looking at only at breakout trades, it's a tough it's a tough world trading only breakouts. You need to trade the reversals, and sometimes the reversals are dominated by the VWAP, and if the VWAP is giving you those hints, as much as you got in Alibaba, and if those entries are combined with round numbers, even better. So again, is trading Alibaba on earnings easy? Obviously it's not very easy, it's very hard. But if you want to get on board with Alibaba, yesterday, obviously you can buy breakouts, take a lot of risk, and some of them work, some of them don't work. You buy the reversal, you don't take a lot of risk. It's a more complicated environment and anticipation to buy. In this case, you can clearly see again the VWAP support levels, and those worked at least once, twice to perfection. This one was very hard to get on board. The second one was a bit easier. Again, you want to get on board with a $3 or $4 trade, which is in this case 3 to 4%. That's what you have to work with. So that's Alibaba. Let's look at shareholders, and again, you won't see much here. The same here. BlackRock dominates. Vanguard, that's the Japanese SoftBank. Jack Ma is number 4, and of course the rest of the FMRs and Goldman Sachs and I don't see State Street. Maybe they're missing in action on this action. So that's regarding Alibaba. Let's move to Trip.com. That's another Chinese stock. Has nothing to do this time, guys. Trip.com has nothing to do with anything other than traveling. Where is it? YTD. So what happened in Trip.com this week? Way better than expected earnings, and a bunch of investment houses upgrading the price or the stock, and Trip.com target price raised at Barclays, maintained overweight at Barclays, maintains the buy at Bernstein, and price increased to 78. Maintained outperform at Bernstein. JP Morgan maintains Trip.com with the buy, target price raised to 90. So again, on top of good earnings, so many analysts that are covering this stock, which is very important. I would say one of the big 5 out of China, and the huge gap up and go. And again, the round numbers are very important if we want to look at the intraday price action. Let's take a look at the shareholders. This is the list of shareholders. Baidu is a shareholder here. We have BlackRock, Vanguard, Morgan Stanley. Again, nothing spectacular in terms of shareholders. Let's take a look at the intraday chart. And again, this is a week where betting on gap up and goes, and again, it's so tough to bet on gap up and goes because there are so many stocks that are gapping up. Some of them are reversing. How many gap up and goes can you trade in a single day? 1. If you are an amazing trader, maybe you can deal with 2, because there's so much volatility, and you need to be on top of those stocks, because if you're not on top of them, you can get hammered very, very easy. So this one gaps up. There is a 70 entry point. The lows of the day is 69, 67. So this is basically the bargain trade here. Entry at 70, and again, you have to focus solely on this stock. If you focus solely, you can get on board with this type of a move. Maybe add along the way. If you're not on board and you're not watching it 100% focusing, you're not going to see the 70. You're not going to see the stop loss. You're not going to see the bull flag formation here at 72. So again, there are opportunities. Sometimes you can see them, sometimes you not. Clearly the bull flag formation was amazing. Here it breaks the bull flag and delivers another $2. So overall, the stock is not doing the MDB. 50% move, but did plenty for anybody that day traded it, swing traded it. How many sellers were short? I'm not sure. And again, that's the second stock out of China that's delivering alongside Alibaba a big beat, so maybe it suggests things are improving back there. Maybe. Okay, so let's move to the losers of the week. Okay, so this is probably the reason why we went down on the Nasdaq 1.3% on Friday, yesterday, and the Nvidia well, not crashed, but lost how much? More than 3%. So the combination of Marvel and DELL, we're going to discuss DELL in a minute, but that's a Marvel, a hideous, I guess, outlook, and obviously if you read the headlines, the report came out better than expected in terms of sales, but and earnings and profits, but their margins are diminishing, and their outlook was very weak, and the diminishing margins and the weak outlook, and the stock dives nearly 20%. This is horrible, and this took down the whole AI sector. Nvidia is closed down, Broadcom closed down sharply, Oracle crashed nearly 6%, Taiwan Semiconductor 3%. Basically, the whole AI marketplace suffered because of two stocks, Marvel and DELL. We're going to discuss that in a minute. So what happened here? There was no gap down and go, as you can observe. Hold on a second. So no gap down and go. Actually, the stock traded higher. Then it started to move up and down. The place to go short was the VWAP. And again, a mellow move, but very little risk. I would call it less than 1% risk on the short here at 64.50. If you are smart enough and very lucky, you can short it at 65. But again, the trend wasn't clear. I mean, if you look at the stock here, what is the trend? Does it have any trend? I don't think it has any trend. So can it break over the highs of the day and move into the gap? Of course. One thing that we needed to remember, though, that the market was very weak yesterday. So a weak market, a weak stock, normally the result, and it's not a stock that it's detached from the semiconductor sector and the rest of the market. It's actually an important part, not a major part, but an important part. So anybody that shorted it, I'm not surprised to see the stock basically close at the lows of the day. That's the fate of the worst of the worst. That's a signal that it may continue. So if anybody is short here, of course day traders are out. But if anybody is a swing trader and has a cushion of 2-3% on this trade, I think it has a good chance of again, Marvel is so unpredictable, but a good chance of continuation because of the close at the lows, and because I think we're gonna see another mini pullback on the S&P and the Nasdaq. Maybe I'm wrong. Again, if anybody is short here on a swing trade, you can cover at your entry at the VWAP or 65. So very little risk. I don't see any way, shape, or form that this stock gaps up Tuesday. Remember, we have the long weekend. So that's regarding Marvel. Now regarding the shareholders of Marvel, Baidu, BlackRock, again here FMR dominates, Vanguard, BlackRock, UBS, and some other corporates, Invesco. I don't see the founders here. Okay, maybe they are in one of these companies, but again, I don't see the founders. Having said that, we know that the big three are, or the big two or the big three are always around in these leading stocks. Okay, so now let's move to DELL, the last stock that we want to cover today. And why did DELL gap down? Obviously, some of the headlines are DELL margins should improve as AI adoption continues. So again, why are investors, I guess, surprised by DELL? Because the CEO of NVIDIA is talking about 1000x demand for computing power. Dell is computing power. So why would Dell crash on earnings when there is supposedly huge demand? I'm not an analyst, but this is what the analysts think. AI stock losses pull Wall Street off record highs, big deal. Dell and NVIDIA drop, blah blah blah. Okay, so nothing serious. I guess everybody was surprised by this move. And again, if we're looking at the price action, a huge bar at the open, but that was it. So no gap down and go. The buyers came in, and pretty much like MRVL, it traded higher, then reversed lower with the market moving lower. Now day trading Dell is complicated stuff. Its spread is thin. The volume yesterday was 24 million shares versus 100 million in MRVL, just to make a point. So again, for day trading purposes, I'm not suggesting go to Dell and this is the best day trade. No, it's not. It's a spready stock, a bit thin, owned by Michael Dell, which is now the dominant guy in this company, and he holds a huge chunk of shares. Maybe that's why the liquidity is not that great. Out of the nearly 700 million shares, only 300 million are float. So that tells pretty much the story. We're going to see it in a bit. Actually, let's look at it right now and be done. Shareholders, you can clearly see Michael Dell here dominating. He's pretty much the Larry Ellison of Dell. Owns 40% of the company. I think Larry Ellison owns the same 35 or 40% of Oracle. So those guys are dominant. Then we have, of course, Vanguard, BlackRock, State Street, Inline, Jane Street, Morgan, UBS, basically FMR. All the rest of the regular culprits that are making money. In this case, sometimes making money, sometimes losing money, but they are probably doing the right thing. Anyway, guys, if we want to summarize what we've seen this week, huge gap up and go on a couple of stocks, especially in the software marketplace, and some stocks that disappointed, like Dell and MRVL, and that managed to draw blood even from NVIDIA, which lost like 4 to 5% this week. We had two Chinese stocks that delivered amazing, 3 Chinese stocks that we discussed. PDD was impossible to trade. Trip.com amazing. Alibaba way better than amazing. I wanted to talk about Canadian banks, but we don't have enough time for that. So basically, this video is going to be roughly above 40 minutes. Just remember, guys, if you wanna participate, leave us comments, and we will like with anything that has to do with the U.S. equity markets. Nothing that has to do with obviously with forex or crypto. Anything that it's to your interest in terms of technical trades, technical analysis, fundamental analysis. As much as we are not experts, but we can help. And of course, what type of content you want our channel to deliver. We're entering our 4th month of basically of delivering content today. So thank you for being here with us. Remember also we have our mentoring sessions that are available. Thanks again for being here with us. Do like, subscribe, and we'll see you in our next video.